You're listening to a Tax Justice Network podcast covering the 10 worst global offenders identified by the Financial Secrecy Index in 2018. In 10th place is Guernsey, a UK Crown dependency, one of Britain's satellite havens, with a high secrecy score of 72.45 out of 100 and just over 0.5% of the global market. I'm Naomi Fowler, talking to the Tax Justice Network's John Christensen. Guernsey, it's a UK Crown dependency, so one of Britain's satellite havens, in 10th place in the 2018 Financial Secrecy Index. That's up 7 places from the last time in 2015. High secrecy score of 72 out of 100, quite a significant increase. So why has Guernsey's position in the ranking got so much worse?
Well, Guernsey is often overshadowed by the neighbouring island or bailiwick of Jersey, which is a much larger island lying about 45 kilometres to the south of Guernsey. And Jersey tends to attract a lot of international attention over all sorts of tax haven related scandals, and more recently a really unpleasant child abuse scandal that's been festering for decades. So what we've seen in recent years is that Guernsey has quietly grown its market share in offshore financial services and has now actually become larger than Jersey, and by and large this has gone unnoticed. So while this is an important part of the reason for Guernsey being ranked number 10 now, the other really important part is that its secrecy score, that is, it's the assessment of the Financial Secrecy Index, just looking at the secrecy aspects of Guernsey, it now scores 72%, which is very weak indeed, whereas Jersey, for example, only scores 65%, nowhere near as bad as Guernsey. So you've got a combination of rising market share and deteriorating secrecy, and that's why Guernsey has moved so significantly up the ranking, whilst Jersey has actually dropped.
Right, and why do you think that it's expanded this market share quite so much? I mean, Jersey's got a bad press for various reasons, but what sort of business is Guernsey attracting?
Well, the first thing to recognise is that Guernsey lies in exactly the same time zone as London. It's very close to London, it's readily accessible to London. Therefore, a bit like Jersey, it's just an offshore satellite of London. And it's become a really major offshore hub for activities like private equity business. Guernsey also specialises in securitization, and there's a law firm which operates actually in many of the British dependencies. Its name is Moore Ozannes, that specialises in offshore securitization of assets. So you have two fairly niche markets plus some offshore pension activity where Guernsey's become quite prominent. Now, in addition to all of those specialist offshore activities, Guernsey is also a booking centre for a huge amount of private wealth, over 255 billion held there at the end of 2016. And the island also has a very large offshore trust business, a great deal of trust activity, which makes the island in most respects a classic secrecy jurisdiction. So you have all the usual ingredients: no capital gains tax, no wealth tax, no inheritance tax, a low rate of tax on personal income tax set at 20%, but only applying to local residents, and no corporate income tax. So you have there all the hallmarks of an island operating as a tax haven.
Right, and there are some positive changes they have brought in, despite this worsening situation generally. What are some of those?
Yes, I mean, if you listen to the Guernsey financial authorities, they like to boast that the island complies with international standards, and also, crucially, it wasn't included in the recent European Union blacklist of tax havens. But if we're frank about this, these standards set the bar very low indeed, and the EU blacklist is questionable. That said, we've seen some progress in recent years on the part of Guernsey, signing up to global standards such as the Automatic Information Exchange Standard, known as the Common Reporting Standard. Guernsey's also created a register of company ownership, that is, of the beneficial ownership of companies. But like Jersey, Guernsey has refused to make this registry publicly available on the internet, for example. So as far as I'm concerned, there's been little progress as far as transparency of offshore companies is concerned, other than that Guernsey no longer accepts large denomination banknotes, which are often used for money laundering, and the Guernsey government has committed to country-by-country reporting. But again, this is a very weak commitment because Guernsey isn't committed to sharing the accounting information automatically with other countries. Now that's a very big deal because the vast majority of the 17,000 or so companies registered in Guernsey are offshore shell companies. So there's potentially a huge amount of corruption and tax evasion and avoidance lurking behind those shell companies, and the Guernsey authorities aren't committed to sharing information automatically with other authorities.
One of the big offerings that Guernsey has is that there still is no registration of trusts, and that's really an important one, isn't it?
Yes, absolutely. Guernsey, like its twin tax haven sister, Jersey, is very big on offshore trusts. It's a fundamental part of the tax haven offer for most of the British dependent territories. So we can't emphasise enough that offshore trusts are the key instrument for hiding the identity of people who want to not disclose who they are to tax authorities and investigating agencies. Guernsey has declined to create a public register of trusts, and like all the other British dependent territories, has refused to make company ownership information available on public register. So now another crucial part of the Guernsey offer is very weak compliance with anti-money laundering regulations and information exchange requests. The Global Forum, which is an OECD body, it's the Global Forum on Tax and Transparency, has commented on Guernsey's weak commitment to information exchange. And the IMF, the International Monetary Fund, has previously commented on the lack of regulatory resources that Guernsey gives to investigating and prosecuting financial crime. So as we've said on many occasions, just having laws and regulations means little or nothing if there's no commitment to enforce compliance.
Right, and what does the future look like for Guernsey?
Yeah, that's an interesting question because in some respects the future looks a little bit tentative. Brexit, for example, could be very disruptive for Guernsey. Guernsey isn't a member of the European Union but has had access to the European Union markets. I'm talking here about financial markets because of a special provision agreed when the UK signed the Treaty of Rome in 1975. So when Britain joined the European Economic Community in 1975, it included access to markets for its dependent territories in the Crown dependencies. Now, with the United Kingdom leaving the European Union, that market access will no longer be certain. And to make matters worse for Guernsey, once Britain leaves the European Union, it will be no longer able to protect its dependencies from measures taken by Brussels, simply because it will no longer be there at the negotiating table. So Guernsey might be headed for exciting times in that respect. Now, the important thing to recognise here is that Guernsey is a Crown possession, that is a possession of the British Crown, and therefore is the responsibility of the British government. Constitutionally, the Parliament in London can extend its own laws to Guernsey and can also veto laws proposed by the Guernsey Parliament. So it's in a very strong position to exert power over the Guernsey government if it wishes to do so. Now, in practice, most UK governments prefer to agree laws consensually with the Guernsey government, but this is just a matter of choice, and if Whitehall wanted to get tough with its dependent territories, it could undoubtedly close them down tomorrow. And the reason I'm flagging that up is because we currently have a very weak government in the United Kingdom. It might well be replaced in the very near future, and the opposition has committed itself to taking very strong actions against the tax haven activities of the Crown dependencies and overseas territories. So as I said, you've got a combination of possible threats to Guernsey's tax haven, one coming from withdrawal from the European Union as a result of Brexit, which might well lose a fair amount of market share, and the other coming from a potential change of government in the UK in the near future.